Let's start by talking about something that is not necessarily as fun. We all know taxes, specifically the returns for last year. They're due on April 15th. That is a Monday, if you're keeping track, by the way, in case you need to do some weekend planning. But there is another deadline that falls on the same day. It's the last day you can contribute to an IRA and have it decrease your 2023 tax bill. Do you remind clients about this as a part of your overall tax planning?
I know a year ago we talked about the same time we talked about something similar to this, and Dave, I'll tell you what, this time of year, taxes is one thing that absolutely just makes my stress level go off the charts. You saw me running around like crazy during AEP. I had 40, 50 appointments a week, and I love that. But taxes for me is just one of these things. I don't know why. It just really makes my blood boil and it gets me all fired up. But one of the things this year that we're actually doing, and it kind of is exactly with this, is we are actually making some contributions for 2023. One of the things we're doing that I work with is the HSA, the health savings accounts, right? You can contribute to a health savings account for the prior year if you haven't maximized that distribution or that contribution. So I know that it's not just the health savings accounts that you can do this with. You can do this with several other accounts, right?
Absolutely. IRAs are something that people need to have a discussion about because not only traditional IRAs, which create tax deductions right off of your adjusted gross income, but even doing some Roth conversions if taxes aren't such an immediate concern. But I will tell you this, I will chime in on the tax thing. Clients' taxes are front and center. Mm-hmm. Dave Ross and the Ross family taxes, those are like last in line. And so you just kind of, you grin and bear it. And I tell my wife, I said, looks like we're filing an extension. And she's never happy about it. But you know what? It is what it is. And the phone tends to ring a lot more during tax time. But coming back to the discussion of taking advantage of tax ideas that can help you lower your taxable income, there's nothing better than to start with funding an IRA. In 2023, you can put $6,500 a year into an IRA. If you're over the age of 50, you can put in an additional $1,000 for $7,500. In 2024, it goes to $7,000 for an under 50 and $8,000 for a 50 plus. So I would say with all of these changes in the amounts that you can invest and can put aside for retirement, it's important to get ahead of it because, you know what, $1,000 over a lot of years of savings, that adds up to a lot if your investment returns are good. Mm-hmm. So, yeah, your advisors should be having these discussions, and we certainly are having those with all of our people. And if you aren't having those discussions, then maybe now's the time to give us a call and let us help you out.
I know that Nolan talks about the tax roadmap, and I hear Chaz talk about that too. And I'm sure that what they go through with this is this very issue right here, right? With the HSAs that I deal with, that lowers your reportable income right off the top. And, those are, they're phenomenal tools that you can utilize those resources for any health bills or anything that may come up. So there are several advantages to that. But like with the Roth IRAs, right, you can contribute or do a rollover into a Roth. You're going to pay taxes on it now, right? And the 2025 is when they're scheduled to have the tax rollbacks. So now is a great time to be looking at doing that conversion or rolling into a Roth. You pay your taxes on it now at the lower tax rate. And this is one thing that every time I listen to Nolan or you, Dave, or Chaz, or anybody that's actually working with these, I mean, it just makes sense to me. you put the money in, you pay the tax on it when you put it in, and if that account, let's say you've got a $50,000 account in there, and that grows over time to $75,000, and you pull that money out, you don't pay tax on any of it, right? I mean, that $25,000 gain comes to you tax free because you paid taxes when you put the money in. All of you listeners out there, that just makes sense to me. And I'm not the brightest guy when it comes to investments, but Dave, I mean, we do this all day long. You do, right?
Well, let me add this. So now you're required by the federal government to start taking required minimum distributions from qualified retirement plans like 401ks, IRAs, by April 1st after the year you turn 73. Well, I have clients who basically don't need those retirement funds. Wouldn't we all like to be in that position?
Right.
But here's the thing. If they were to start Roth converting, let's say you've got a 65-year-old that doesn't need the money but can start doing Roth conversions, they could essentially convert a lot of their IRA assets over an 8-year period and spread that tax out over that entire time. And then by the time they turn 73, guess what? None of their IRA, or a very small amount of their IRA, is required to be distributed, and every dollar that comes out is federal income tax free. That is pretty good planning. So some people who are saying, "Oh, I don't need that retirement money today," maybe they should be thinking about it.
Oh, absolutely. Absolutely. And I did not know that until you just mentioned that. That just makes it even a better plan, and I love that option. So if any of you out there are listening and you want to know more about any of these, we're here available. You can reach our office, give us a call, and we'd be happy to set these up for you.
Again, the number is 419-794-3030. Obviously, first and foremost, don't forget about tax deadline, April 15th. It is important to make sure that you pay as little in the taxes that you owe for 2023, and hopefully some of these strategies contributing to an HSA, the IRA contribution can help minimize that. But it's not just about what you owe or the taxes that you have to owe for last year, but the years to come, 20, 30 years, and that is where that tax roadmap comes into play, not just about the taxes that exist now, but the potential taxes down the line. The team can walk you through the process and make sure it is as tax savvy, as advantageous to you and less to Uncle Sam as possible. 419-794-3030 to begin the planning process, or go to the website, and that's arhq.com.